Hello accounts people, time to have a significant look at journals. Journals are often not done as well as they could be, particularly in the advanced bookkeeping exam. So this is essentially a revision guide. As we go through the journals, I'm not going to actually sit there typing them in, otherwise it would take hours. I've given as many as possible. You can see the tabs here, I'll group them into little selections, and in your mind say to yourself, do I understand this? Is this what I would have done? So, reasons for journals in the first place, fairly straightforward. Number one reason is there isn't a suitable day book or book of prime entry, because the journal is a book of prime entry by itself. Doesn't fit in the day books, doesn't fit in sales, purchases, the returns, discounts allowed, or maybe doesn't even fit in the cash book. So that's the number one reason. Also, we might have a suspense account. Maybe we didn't know where to post something. So I've made a big purchase. I want to record the transaction so I can do my bank reconciliation. I want to claim the VAT back. Didn't know what code to put it in on Sage. Post it to suspense and then clear it later. Also, to explain unusual or irregular transactions to a manager or auditor. If I transferred money into a deposit account, maybe to earn some interest, I need to make it clear this is authorised, where it's going. It's not going into my own bank account. Corrections. Somebody else has made loads of mistakes. There's a big red trail, maybe in Sage or otherwise. Nothing adds up, nothing reconciles. I've corrected it all, and now I need to explain to the manager or auditor what I've actually done. If you make an auditor scratch their head thinking, what on earth have we done? You've probably added £45 to your bill. And then on a different level, the opposite way around really. So you're the accountant, you're the bookkeeper. Maybe you're actually telling people, your client, what to do. In other words, this is what we want you to post into Sage or into your bookkeeping system. Maybe end of year transactions, maybe corrections, or just other items. Maybe they asked us how to do something because they didn't know. So on with the range. So some of these categories have an unlimited range. With the non-current assets, there's only so many around. However, the accounts, of course, can vary. We can have a depreciation charge account for motor vehicles, plant and equipment, fixtures and fittings. We can have separate accounts for each class of assets or even each asset. So in that respect, it's unlimited, depends on our assets. So first one then, straightforward purchase, debit the machine at cost and the VAT, because if we're going to claim the VAT back, credit the bank. The VAT would just be added to the cost if we're not VAT registered or we're not going to be able to claim it back. If it's on credit, the difference is it goes to the sundry payables for credit. And then the next step, we're going to work out and enter our depreciation into our depreciation charge account or depreciation expense account, credit accumulated depreciation, and then at the end of the year we will credit depreciation charges when we transfer close off into our statement and profit and loss. Then our disposals, so all the rest are to do with disposals. So step one of disposals, transfer the vehicle that you're disposing of or the assets you're disposing of into the disposals account. Step two, transfer the appropriate accumulated depreciation by debiting the accumulated depreciation, crediting disposals. Step three, put in the proceeds. In this case we've sold it for £480. We've had to charge VAT if we claim VAT back when we originally bought it. Otherwise it would be £480 in both accounts and no VAT. If it's part exchange, the debit entry is to the replacement asset. In this case it's a motor vehicle, so we've debited motor vehicles at cost, but the credit entry is still to disposals. And then at the end of the year, because we might just do it as one fell swoop with all our disposals at the end of the year, if we made a loss, it's debit profit or loss, credit disposals, and the opposite way around, credit profit or loss because it's income, sundry income, debit disposals if we've made a gain. Another one where there's a limited range, not such variety, so less likely in AAT exams, maybe one little question, a tick box question at the end of the section at most, hopefully. Accruals and prepayments are enough of a problem without having to work out the journals. So our expense accounts, well, first of all, at the start of the year, of course, we reverse our opening prepaid expenses. So if we've made a prepayment, debit the expense account, credit prepayments to reverse it, and the opposite for accrued expenses. Then at the end of the year, we close off the final amount to the statement of profit and loss, debit the profit and loss because it's expense. And then this one should be fairly routine, sometimes the easiest one to remember to put in the first place. We've made some payments for our expenses, credit the bank, debit the expense account. If we got VAT, of course we have to split the VAT out so the expense gets the net and the VAT gets debited. At the end of the year then, so we come to the end of the year, we've got a prepayment, so we prepaid in advance, so we reduced our expense account by crediting it and then record the fact that we've got the asset of prepayments or prepaid expense. And then the opposite, we've got a bill, we've done the work, we've used the electricity, gas or whatever the expense is, so we're adding it to our expense account and then we're recording the fact that we've got a liability because we haven't put that in our books. Income account's the opposite way around, so not to spend too much time on it, reversal of opening prepaid income or accrued income. Obviously the language gets here completely the opposite to the expense accounts. Transfer the final amount to statement of profit or loss. It's now of course income in the statement of profit or loss. And the amounts received, debit the bank of course, that's the same way around. With VAT of course, if we're charging VAT on our income account. And then closing prepaid income seems to go on more often than anything else. Prepaid income is a liability. Somebody has paid you for something or some work or in advance. You have a liability. You owe them the work effectively or the goods or whatever you promised to do for the money. And then accrued income is a little bit like a receivable. You've earned the sale, you've earned the income, earned the commission, earned the rent, and they owe you, so it's an asset like a sales ledger control account. Bad debt is much smaller range, it's much smaller. So first of all then, writing off a bad debt, and then writing off a bad debt with VAT. Irrecoverable debts, sometimes called an irrecoverable debts expense account, but we don't tend to use the word expense because it's possible there's money going into it and reducing it. Then adjustments, so these are the ones that go wrong. Adjustments account go into profit and loss. Allowance for doubtful debts is taken off the receivables. So this is one being created from scratch, our first step. Credit allowance for doubtful debts, debit the adjustment account. And then if we reduce it the following year, so we had it at 200, this is us reducing it, taking it down from £200 to 150, so that's now sundry income in our adjustment account. Some accountants would put that into the irrecoverable debts and just combine them. It doesn't really matter at the end because, particularly for a business, it all turns up in an admin cost, so it doesn't make any difference to our profits or loss. It's just knowing what's actually happened. The opposite, of course, to reducing it is to increase it, so another credit entry into allowance for doubtful debts. So this, if it had been 200, would now take it up to 260. And then a specific allowance. So this is the one that accountants vary on most. Do we actually put it into allowance for doubtful debts adjustment, or do we just put it into our recoverable debts? If you make a specific allowance, it's probably not going to come in, as opposed to being certain it's not coming in. Either way, it'll be a credit to the allowance for doubtful debts, and just have a look what the drop down box is or what your options are for the debit entry. It's only going to be allowance for doubtful debts adjustment or irrecoverable debts, it won't be anything else. And then after a few years we get some money in from previously written off bad debt, so debit the bank because it's money coming in, and credit the irrecoverable debts because what we're actually going to do is set it off against this year's bad debts, which is why irrecoverable debts isn't always an expense. If we didn't have any irrecoverable debts in that year, that would be £400 of sundry income. So we're getting through the list, but now we're on an unlimited range, so we've only got some sample ones here, typical ones, because who knows what somebody's done incorrectly. So two categories: the ones that the trial balance still balances, And of course these are the ones that have got names. So our first ones, errors of commission. So this is just between two accounts. So we've obviously entered something into Mrs. J Smith and she's not happy because we actually sold the goods to Mr. J Smith. And then another error of commission, just this time just between stationery and printing. So now we'd posted it into printing and we should have put it into stationery. So that's going into stationery, that's taking it out of printing. Then our next category, motor vehicle expenses being debited and motor vehicles being credited because we'd put something that we should have into motor vehicles at cost. That is our error of principal. And another error of principal, so principal means a different type of account, so that's assets and expense. This one's capital and sales, they're both credit entries, but maybe we put some sales into capital and we shouldn't have. So now we're taking it out of capital, putting it into sales. And then this is an error of omission because we just not put it in our daybook in the first place, so that's just a purchase on credit because it's the control account and the VAT separated. And then an original entry, so it should have been 46, we put it in as 64. So this is the removal, debit the bank, credit stationery, and then we post it correctly. Yes, there's £18 difference, but that would cause problems reconciling the bank or somebody not picking it up and scratching their head working out what on earth you've done. Then we've got misposting of a receipt of £145 from a credit customer. Well, as we're doing it twice, removing and correct posting, it must be an error of reversal. So that removes it, undoes the credit bank, debit sales ledger control account, and then that posts it correctly. Exactly the same on both journals. And then one last one, a compensating error. I'm sure you worked out that's the one that's missing. Nothing to do with each other, two completely errors, but they just happen to balance out. So we have overcast our sales. So we're taking the £52 off our sales and we've missed a payment. Maybe somebody forgot to mention that they'd paid for something by debit card, or we bought £53 worth of fuel and it's come up on the bank reconciliation and on the system as a pound, which is what happens when you pay at pump, if you've never done that. So that's one category, and these are the ones that make sure that the trial balance doesn't balance, because there's a difference between the debits and the credits. So all these will have suspense accounts, so this is only a typical set. So correction, only entering purchases, well, that's fine. So but we've only put it into the cash book, so now we need to put it in our stationery and then for credit the suspense account. This one then, so what we've actually done, we bought £20 worth of stationery, put it in the cash and the bank, but we didn't need to put it in the bank because it was paid for cash. So we debit the bank, therefore we'll credit the suspense. So 2 credit entries, 1 debit. This one then, so this one, different ways of doing the same correction. Read the instructions, read what you're actually supposed to do, have a look at how many rows you've got. You'll notice there's 2, 3 and 4 row versions. So what we've actually done, we've put in £46 worth of stationery, £64 in the stationery account, correct entry in the cash book, so that's fine. Don't need to worry about trying to change the cash book. We could take it out, put it back in again if we really wanted to. That'll just confuse everybody. So simplest way, we could actually just credit the stationery, reduce it down to 46 rather, therefore £18 in the suspense account. Or we could remove it and post correctly. Or we could remove it from stationery, post it correctly into stationery and do the balance in the suspense account, depending on our systems, what we normally do. What is our company policy on journals? So this is one where we just missed the rental income off the trial balance, so we'd better put it in as a credit entry and therefore debit suspense account. It could also be we were setting up a company in Sage and we missed it off the opening balances. It would be exactly the same journal. This is one where we've undercast something. In this case, we've just undercast purchases. If we'd overcast it, would be a credit entry, the double entry in the suspense account. And then we've got a misposting from the sales day book. So classic AAT questions. What we should have done is credit sales and VAT, debit the sales ledger control account, but we credited sales correctly, we debited the sales ledger control account correctly, but we actually debited VAT instead of crediting VAT. So we can remove the error by crediting VAT, then we can post it correctly, and then we can just balance off in the suspense account. Back to ones where there's a limited range. Very important, of course, that you know for exams that we debit the statement of financial position and credit the statement of profit and loss for closing inventory. And then at the start of the year, you won't see this so often, but actually we do need to transfer. It was, of course, an asset account in the statement of financial position. We need to turn it back into our expense journals, or our expense accounts. And then if at the end of the year we've got some inventory that isn't worth as much money as it should have been, we will need to reduce the amount in the statement of financial position by 200, so credit the debit, knocking it down to the 11,800 if this was the same question, and debit the statement of profit or loss. Costing journals, so dealt with more, not such a problem actually, because there's an easy way to remember them. Debit the receiver, credit the giver. What there is though is an unlimited range, and we can have a vast amount of cost accounts, we can have control accounts, we can have more specific expense accounts added into work in progress or projects or departments, that there's no limit. So these are the just illustrative ones. So we bought some inventory, stores, stock, whatever the cost centre is, on credit, hence it's credit trade payables, debit inventory. This is the same transaction with VAT, because we'd only put the £500 into inventory, the net. And then if we bought it on debit card, of course it would be credit bank. And then VAT, still buying it from the bank, but we've now got VAT involved. Labour costs don't normally cause a problem. This is wages control, of course, is credit, so we've worked out how much labour has been spent in the week or the month, so credit the wages control account, and then we can transfer that into our direct costs department as an expense, and then add it to the cost of sales. Then we will still have the problem though that we need to pay the net and show the entries for this, so this is a bit of an awkward one, that one, as it almost needs a third entry. Work in progress, indirect costs or overheads, wages control, or maybe in from an overhead control account. So again, think about who's being charged and who's actually giving the expense. And then work in production is being charged for some materials. These ones are clearer, and then they're sending them back. Different amount of money then. And then lastly, a few oddballs. I mean, again, don't forget, part of the use of journals, there's no other day book. Well, yes, if a contra doesn't necessarily have anything, there's nothing in the cash book, there's no invoices, there's nothing in the sales day book, nothing in the purchase day book. So actually, if we're setting off £100, debit the purchase ledger control account, credit the sales ledger control account, and of course the individual supplier and customer accounts. Opening balances, bank, put some money into the bank, capital. Well, we might not even have an account system when we first do that. Other opening balances, of course, Sage of course does the double entries for every opening balance into the suspense account. And then maybe later on the owner takes out some drawings, credit the bank, there's money coming out the bank, debit the drawings. The opposite way around if the owner put in some more additional capital. And that's the list that I can think of at the moment.